Good morning, everybody. It's Friday, December 5th, and let's take a look at my daily plan. And I titled my little thing this morning, Groundhog Day. The levels that keep going up over the last few days are the same level. So let's just say institutions, traders, whatever, are targeting the same areas, kind of grinding it higher somewhat, and that's what we're doing. Here's yesterday, pretty much the same levels. I gave it a little more nuance on top yesterday, but pretty much the same area. It really shouldn't be magnet. I don't like the way I wrote that. But I mean, okay. Anyway, so the expected move today, when I looked before, was, let me double check, was about less than 30 points when we were at 65. It was like 28 or something. So let's call it, well, we were at 70. It was about less than 30 points. Let's call it 6,900-ish. On top is a bit beyond the expected move. And I'm willing to go out on a limb and say that many of us, while we know that 6,900 is kind of a target, so to speak, I'm probably not expecting that to hit today. And I'm going to say, gun to my head, we don't get there, but I certainly wouldn't be surprised if we did. And the bottom of the expected move is actually a little dicey, puts us at 68.40, and I'll show you why it's dicey. And I made that my trap zone. I made a pretty tight trap zone. This is kind of almost half the expected move. Expected move would have put us down there near here, near 40, and up near 6,900, actually 68.95. For those of you that don't know, the expected move is the move that the options market expects or priced in to the market. Let me just say one more thing about expected move, blah, 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 blah. Let me look at my notes. So the expected move on Thursday at the close, and some people kind of like to look at it that way, and I don't know, potato for me, 68.20 would be the bottom of the move as priced in at the close yesterday, and 68.85 would be the level that's priced in. So 20, 25-ish, and 85-ish were priced in yesterday, and then we drifted overnight. So just some numbers to keep in mind. Okay, let me backtrack a little bit and talk about yesterday. So we've been stuck in this. I mean, yesterday we were in basically a 40-point box, less than the expected move, realized volatility. We've been moving less than the options market has implied we move basically all week. And let me just get some, where are we? Pretty much post Thanksgiving, 6,800, 68.77 in the after hours Globex section. So 75-point range all week, period, end of story. It's a very tight range. Let me show you this real quick. So here was the expected move that was priced in last Friday to this Friday. And I'll get this updated today. This is one of my repeat trades around this expected move. And I show it to my subscribers. Some of them like it, some of them don't. I'm not here to feed them trades. I'm here to teach them how to trade. But you see, we're just right in the expected move. We barely budged. We had a little breakout, if you want to call it that. And here we are, just staying in this move, in this range. Okay, let's get back to the chart. Okay, a little pullback here. Nothing dramatic. We're going to basically be flat. Now, breadth was mixed 50-50. Basically, market treaded water yesterday. Pretty much all the indices, whatever, broadly speaking. That's kind of a biggish bar. I don't know if it's headline driven or what it's driven by. Anybody out there in Twitter land see anything? Let me know. We want to talk about volatility real quick, and then we'll look a little more granularly into positioning. So yesterday, as I've been good, then it's trading bullshit. Yesterday, again, I remember there was some weakness in the morning yesterday. Thursday. So yesterday near the open, the VIX and the VIX 9-day, this is wrong on my thinkorswim. The difference was less than a point. It was still healthier than it had been. And then throughout the day, the difference kind of widened to a relatively respectable 1.5 point difference between the VIX and the VIX 9-day. Why do I look at the VIX 9-day? I've been talking about this almost every day, so put your answers in the chat, everybody. This is a pop quiz. What is the VIX 9-day measure? And don't just tell me 9-day volatility. I want something more specific. Ready, go. Giving you guys 20 seconds. You kids type fast. I'm going to give you guys 10 seconds. Okay, pencils down. The VIX 9-day measures, okay. The VIX 9-day measures the volatility using Friday options before 9 days from now, i.e. yesterday, that would have been today. And the options chain, the option pricing the next Friday after the 9 days, which would have been Friday, the F that has the FOMC in it. So that's local volatility Friday to Friday. FYI, just while we're doing a teaching moment, the VIX actually measures the implied volatility of a strip of options in the SPX calculated by the magic people over at the CBOE. And there's formulas are there if you want to look at them, knock yourself out. The Friday before 30 days from now and the Friday after 30 days from now. That's what it measures. Not every option on the planet, not the big monthly, which actually surprised me. I personally, if I were making an index, not that it's up to me, would bracket the monthlies, but apparently it's not up to me. I'm not algo-y enough or software-y enough to write a program to do that. Actually, I'm surprised there isn't one, but anyway. Maybe some hedge fund has it in their back pocket. So I'm saying all that to say this, look for that divergence. When that divergence lessens, when the 9-day gets closer to the VIX, and this is not going to move in the pre-market, when the 9-day gets closer to the VIX, then it indicates more of a short-term bias or reaction rather than longer term. And with the FOMC coming, we expect short term. The VVIX volatility, which is calculated using that same formula that the VIX uses on the S&P 500 on the VIX options itself. That's all it is. That's all it is. Same formula. They already have the formula. Why not just feed this data in and use the same formula? That's the VVIX, volatility. And that shows us that not much was happening in the volatility space. Wasn't like big bids one way or the other. Big changes. Is that a little clearer now? Okay. I'm going to repeat this again on Monday. So it's not going to be a pop quiz because you're going to know I'm going to mention it again on Monday. Okay. So meanwhile, we're in the Dow Jones Fraser department here, 68.50. Haven't stalled yet. We're going to come back around to this and see what's going on in a minute. Let me see that. Here we are in all kinds of bands. Doesn't really matter. That looks pretty serious. That's pretty much what? 10, 15 points straight down drop. Let's take a quick look. Let's become chartists for a second. Even on a 5-minute candle, no buyers anywhere. Oh yeah, now I didn't mention here, but I mentioned it in my notes. The turd in the woodpile, or the fly in the ointment, or the turd in the punch bowl, technical term, is the Japan interest rate story. If we notice, the 10-year has been creeping up back above 4. Not a crazy level, but the 10-year has been creeping up. And for those of you that aren't macro bros, and I'm not one either, but as a macro tourist, what I can tell you is the spread between the Japanese bonds and the US bond rates is a big institutional and sovereign wealth fund trade. And as that spread narrows, as the Japan bond gives you that much more, our bonds get sold, rates go up in whatever magic proportion that is, and that spills over into the S&P 500 because of whatever it's because of. Doesn't really matter why. It spills over into the S&P 500, and many of you probably remember August 2nd last year. Remember August? We had that topping out. July, end of month. We had that topping out. July, end of month. Where is it? And we had that ugly August. And then we kind of reversed. How's the Japan carry trade kerfluffle? Now, I don't know if that's what's going on, but just mentioning it that the Japan analog to Powell said that there might be more rates coming. I have no idea if that's what it is. No idea. if you guys want to be a tourist and join me on Twitter for a second, let's see who's credible. That guy, this Walter Bloomberg guy, he's no schmuck. He came up with a good name. Google price Hardaway Hassett, Fed Reserve Bank President Hassett, not discuss Fed President issue. Hassett will be disappointed with 3% growth. Hassett massive momentum into next year. Factories open. Morgan Stanley looking for the. Okay, I don't see anything here. This doesn't read to me like this. So if anybody has any news, whatever, in the meantime, I don't know, we're gonna sit tight, but this is newsy. This is not trading bullshit, as I like to call it. Okay. With that said, and with the picture clear as mud, I'm gonna turn the mic over to my good buddy Chewy.
Good morning, everybody. Let me share my screen here. Is that showing okay? Can you guys see my screen?
Yes, it shows.
Okay, perfect. Well, this is what I have for you guys today. We're currently in my bounce zone. When I wrote this out, we were still in range. I'm still going to leave this as my range. We might even extend this range down here. Regardless, I'm not expecting it to be easy to break out of this range here. We have a strong floor and our ceiling.
Can you tell us what those numbers are when you say this range? Because people
Sure.
might not see where the numbers are.
Yeah, so my range is going from 68.82 down to 68.55, give or take a couple points. The pivot that I'm watching today is 68.74. If we can hold below it, I think that we're okay to be entering shorts. If we're above it, we're okay to be entering longs for any of the targets that I have here. I still kind of have this as a bounce area where we're currently sitting. Now,
so the bounce area is more or less right here, more or less 68, more or less yesterday's close.
68.65 down to 68.57. That's correct.
Okay.
I think if we can hold this, that might really set us up for some fun to the upside as we open. Maybe just up to pivot. Regardless, it's a good 20-point move. After that, we can target 68.44, maybe 68.28, and then obviously 6,800 down here if things get spicy. I don't think they would, but I like to plan just in case they do. Should we break above that ceiling? I think 68.92 is a good place to target, and I think that 6,900 area is a good place to reverse.
I'll tell you what, they call me McGraw based on quick draw McGraw, who shot, quick on the draw. I'm real tempted to grab an E-mini right here. I got one loaded up. But what do you say, kid?
For longs?
Yep, we're long right off that bounce.
Here, let me give you even a cleaner answer here. 1 second. I think if we can go back above 68.65, I'm in longs.
Okay, so you're one of those that actually wants confirmation. Okay.
Yes.
So you're not a front runner like me. Okay.
No, I'd get shot in the shootout for sure. But I do like longs from here. The way I see pre-market is it sets us up for a reversal into open. That's not a rule or anything of mine, but I like to think of it that way. With this sell-off, especially as aggressive as it is, I think we should get a decent bounce into open. That's not a trade I'm taking. That's not something I'm sharing to do necessarily, but because I have those levels here and the aggressive kind of entry in pre-market, I think it does set us up nicely come that 9:30.
All right.
And the blue arrow indicates the open, just so everyone's clear. Not long entry.
Yeah. All right. So, I mean, like I said, this looks newsy. I'm not really sure. We'll find out if it is. Let me see. Again, I'm looking, maintain. On the little feeds that I have floating around here, I don't see anything that would justify this. So, yeah, exactly. Exactly. We're kind of at that pivot. I look at a 6850 pivot round number, but you could easily say 40. The, zone. This has been the pivot zone. So yeah, let's see what happens. And the way we've been shopping, we go 10, 15 points below, 10, 15 points above, and we've just been rotating around. I guess the 40 is probably a better area to think of, or even 35, because remember earlier in the week, we were topping out at around 50. We've pushed the top up a little bit over the last few days. So yeah, you can think of 40 SPX or even 35 SPX as a pivot. All right, let me anything else? I want to show them the
yeah, I am going to change my range from, so I'll send you guys in this picture in the futures chat. You'll see a screenshot of this with intraday updates as well. But I just moved my range down from 68.75 to 68.57. Just made it a little smaller.
Oh, I should probably do that. Put the lines on my chart and just move them instead of redo everything every day.
Yeah.
You kids come up with all the tricks. Okay, very good. And for the record, I went long, real small on that. I don't know if you heard the ring. Now let's see. So I got in at around 57, 58. Let's see. For the record, not investment advice, just Doc being Doc. That's how I roll. Not going in big. This is not a bet the farm. This is lotto. Anyway, let's take a look at the gamma setup. Okay, and actually, this is kind of a dangerous place, but I'm expecting it, and here's why. So here we are right now at 68.50. Trust your eyes. Your eyes are a good filter. Think right support, left, right support and resistance, as if you were looking at a chart and looking left where buyers and sellers showed up. And left, think path, ladder, magnet, two directional. Okay, let's forget the whys and wherefore. Let's just be practical. Okay, and yes, just to keep life interesting, we have PCE at 10. And so trust your eyes, like I said, below 68.50, what do you see? Nothing. So in the gamma world, not in the TA world, not in the Dalton depth of book world, whatever, strictly in the gamma world, in the 0 DTE locally, below 50, there ain't much. What we see is 6,800, round number, some customer longs, market maker short, potential magnet, pretty far away. I would be shocked if we got there, but it's there. You can't pretend it's not. I also like it as a potential accelerant, especially if we go down and market makers have to hedge to cover that. Then as we stall and don't get there, then they have to buy back. And that's why we get a lot of those crazy moves and we can mean revert right back to 68.50 if we're down here. I'm not saying that's what I expect, because that's not what I expect. where we are locally and where we've traded overnight was basically in this on SPX 6850 to I think 65.75 max range. And if what you see here looks confusing back and forth, that's because it is. It's just what I call fishbone pattern, like a spine just going back and forth. My old TA mentor used to call it frog in a blender. I'll show you why we call it frog in a blender. Frog in a blender. But we're not going to be so crass. And so this is just a really choppy, sticky area. 68.50 to 68.80, 85, 35-point range is choppy. If we can get over 65, where we kind of been stalling out, so that would be, if we open 5 or 10 points in the red, in the green, pretty good path up to 80. So 65, 75, 85 fly might work, might be fun. If we can pull up over 80, we have a ladder up to 6,900. So as seemingly improbable as that might be, over 80 and hold, especially on a retest for you TA people, which I came from that school once. I used to be among the crowd you're in with, as Bob Dylan would say. Positively Fourth Street's the name of the song. There is this path up here, big ass bar. Now let's talk about 75 for a minute and 35. Why, you might ask? Because our IC whale is not a one-trick pony, he's a two-trick pony. And his other trick that he pulls out of his bag of tricks, like Felix the Cat on occasion, is he'll buy an iron condor instead of selling an iron condor. For those of you that have kind of grew up in the world of iron condor men selling iron condor, sell options. That's now, iron condor is a structure that you buy or you sell, just like a single option is a structure that you buy or you sell, or vertical or spread is an option that you buy or you sell. So he sometimes buys an iron condor, which he did yesterday, because we had a few days of compressed range. Remember, his strategy is expanded range days for a few, sell the expected move, and a series of compressed ranges, buy the expected move, selling the outside of the expected move, top and bottom, based on the close of business that day, based on Thursday's close. That's it. That's $3,000 a month. Thank you very much. And if you lose, you double your size, and we keep going until you go broke or not. You haven't yet. That's the IC Whales trade. Sell your spreads. If you're selling for 1/3 the width of the spread, about 170. If you're buying, you do the opposite. You buy it for about 250, 280 to try to make 5. That's the risk profile. That's it. That's the IC whale. And me, you see me messing with him on Twitter. Anyway, so that said, now that I got that off my chest, he bought the 75.80. Here, you see it right here? There he is. There he is. And he bought the 35s, the 40s and 35s, I forget. But why we don't see that many there is because market makers were already long that, so they sold it to him. And I explain this to people. What you see in open interest doesn't necessarily mean what the market maker has in their hand, because the market maker has in his hand had in his hand the 68.35 options that, let's pretend, Selena sold to him yesterday. Selena sold 568.35 puts. So the market makers were long. And then the ICL came and bought 1,000 of them. And now the market makers are short some of them. Although the OI will reflect both because neither of them have closed. So just FYI. Okay, what does it say? The 67.50 51 trade from yesterday you mentioned, I set a limit order filled at my price. You think it'll be okay this morning? 67.50? Hell yeah. That's the short answer. So 67.50, for us to get to 67.50, let's think about this. For us to get to, to get to 67.50, we have to get out of this sticky zone. And right now, I told you I called bullshit on that drop. I might get out of that scalp in a couple of minutes. We're 68.50. It's not like we fell like, to the floor. We pulled back, dramatic pullback right in the range. Okay. So for 67.50 to materialize, for that volatility to materialize, we'd have to get out of the sticky zone, travel more than twice the expected move, or about twice the expected move down to 6,800, fail here at 67.90, not retest and come back in here, fail again at 67.90, go all the way down here to 67.50 area where we have customers short 1,400 options there, and another 5,000 almost over here at 67.50, making this market maker buy on the way down zone. We didn't pick that number out of our butt yesterday. We picked that number because this structure was already here. This structure was already here yesterday. The 50s were sold, the 40s were sold, all this stuff was sold, was there. So just saying. So yes, that was a long-winded way of saying by explanation to the folks watching, wherever they're watching, at home or from their office, whatever. That yeah, I think we'll be okay this morning. I did them too, only a 10 lot maybe. I did them 20 wide. I'm not worried about them. I have my standard, not investment advice. I have my standard 65% buy to close in, 15 cents, whatever it was, 20 cents. And I'll hear that lovely ring in the morning, and that kind of pads my book for the day. Anything else? Anybody? Oh, let's take a quick look at what's going on there. Okay, yeah, so remember we kind of did this together? Oh, you went lower than I did. I did one for science as we were chatting about it. Put it in yesterday. Here was, so what you see here is ones that were filled yesterday that I did here on TV, as I like to call it, and closed at my targets, every single one of them. Long flies, short spreads, whatever. Just one for science and for teaching. And so here, you see December 5th, this was the iron condor that we talked about in the room, and we talked about why we like that one. Teaching, not investment advice. Gotta learn to fish, not go, I can't feed you fish forever. I'm going to India, by the way, announcement, end of January, like 20th, I'm not sure the exact date, for about a week, 10 days, 2 weeks. And so you guys have to fish on your own. I think they have I'll have internet where I am, but it might be kind of remote, so we'll see. But anyway, so I sold this for 60 cents. And what I like to do is put in a buy to close. 50% I can get out now. If it's a tiny trade, doesn't really matter. I'll put in 65%. That'll be 20 cents. It's already at 63%. You know, obviously, if you did these, you do whatever size is, comfortable for you. But anyway, that's it. So that was yesterday's trade, Doc. What about now? Okay, good that you should ask. It's the same structures we've been having all week. Okay, just for fun. Past 7 days. Okay. I'm going to grab a fly from earlier in the week. Where can I find the fly from? Oh, here we go. Here's a butterfly from earlier in the week. Oh, it's not letting me do a similar order. Sons of bitches. Okay. I thought that I could copy the same order. Okay. I can't. I have to do it myself. All right. Long butterfly. Let's start with the call fly. That 75 area that the IC whale is targeting. $60, $70, $80, $1.20. That's probably not bad. I'll put in a keepy. And maybe I'll revisit it. On the bottom, we know that if we break 50, we get a little bit of a nasty move, right? And so let's go 45 to catch the convexity, 60 cents. That's not bad. I'll try and keep skated at 50 cents. We'll see if I get filled. Sometimes revisit these and change them 5 or 10 cents, but what you see me putting in, I do. I leave them. Okay, now in the spread department, same as yesterday. I mean, shit, I can just copy my trades from yesterday and do them again today. Wow, even 67.90. That's fairly juicy down there. I'll take
Longs are
60.
cooking, Doc.
Huh?
I don't know if you took the ES longs, but they're cooking.
Oh, okay. Well, if you want, I could sell you mine. I got it 8 points ago.
Always trying to make a trade.
I'm kidding, but I'm not kidding. The way I think about it is I like to trade the channel. And when we get to the top of the channel, I sell it to you guys that do the momentum and sweat it out. I'm only partially kidding when I say that.
Makes sense.
Not everybody trades everything, the same way. There's more than one road to enlightenment, as the man said. Many roads to enlightenment. More than one way to skin a cat, as they might say in the country. And one of my, well, actually, that's not what I was going to say. It's not true. My former TA mentor, my first like real mentor with classes and all that bullshit. His big trends was his thing. He made his name trading trends and catching scalps and momentum. But he also had one of his systems was channel trades. He used a Donchian channel, whatever he used. And that one appealed to me. So that was the one that I focused on more. And I like to buy it on the discount rack, and I'll sell it for you at list price. It's kind of how I look at it. Now, anyway, it's like I'm the wholesale distributor. You're the retail buyer. You buy it here and you sell it to the next guy. You see, I'm the national distributor. You're the local distributor who then sells it to the next guy who wants to buy it higher. Yes. Analogy. So did you go long or you thinking of going long?
No, I went long with you.
Okay, good. Oh, you went along with me. Oh, okay. All right. So when are we getting out?
I like here or maybe. Well, I went long on NQ, so I'm looking at 652 on NQ for an exit.
All right. Oh, NQ. Okay. Yeah, the wild animal. I got to trade more of that. My new BFF option sell, the option seller on Substack, who I did a video with over the weekend. He likes to trade NQ too. And Val Trader, who's not here today, but I think he'll be back Monday. He likes to trade NQ. So maybe I'll have to join the NQ crowd a little bit. But the thing is with SPX, I have the granular MRI of the market that I can't get anywhere else. Can't get it with any underlying, can't get it with NQ. I suppose if there was proprietary data to buy for QQQ or something, you could get it. And there is. The problem is, I did a deep dive into this again recently. SPX, the CBOE, is the only game in town. So everyone who buys and sells SPX does it on the CBOE, so that all the data is tagged. They know who bought, who sold. It's bucketed, institutions, whatever. So when you buy that data, not me, whoever buys that data scrubs it, whatever that means, and does their magic math to it. It is what it is. There's no ambiguity. Other stocks like Apple, Amazon, QQQ, whatever. And I have to check with QQQ. So let's just say the individual names. They trade on the CBOE, they trade on the NYSE, they trade on the NASDAQ, wherever it is they trade. They trade on different exchanges. So CBOE gets about 18% of the volume on this one, 14 on that one, 24 on this one. So it's split between exchanges, so you don't really know. Now you could extrapolate, and I'm still mulling it over. Well, is the 20% that sold on and bought and sold on CBOE transacted there any different than the volume on NASDAQ? Would that be a representative sample? And the answer is, I think so, but I don't know. Maybe certain players who like to buy and sell transact more on one exchange or another. So I'm not sure. So the answer is a definite maybe, I don't know. But again, long-winded way of saying that's why I like the SPX, because I know a lot of ambiguity is taken out of it. It's still ambiguous. So that's my speech. All right. I'm gonna run now.
Good luck, everybody. DM me if you have any questions.